I'm delighted that the Leader has allowed us this opportunity to make statements on the future of banking, as it gives me an opportunity to talk about an extremely important area of finance which has not received nearly enough attention in this country. I want to thank your department for acting so swiftly to support borrowers since COVID-19 with payment breaks for businesses and homeowners. I welcome the scrutiny of our banking sector that they will face with regulatory and supervisory framework put in place by the EU. My colleagues, no doubt, will deal with the KBC and Ulster issue and the lack of competition there now is in the market for citizens. For my part, I'd like to focus on one aspect of banking which very much is in the future. I speak, of course, about cryptocurrency and the possible impacts of a decentralised monetary system on traditional banking. Broadly speaking, a bank performs two economic functions. One, they operate a payment system, and two, they engage in a financial intermediation, lending and investing either the money we deposit with them or the credit they themselves create to business enterprises, households and governments. The second function is the business side of banking, banks as profit-seeking corporations with stockholders who provide the equity capital needed to start and maintain a banking business. As with any business, there is the level of inherent risk. What happens to the banking system and the economy if many borrowers can't and won't repay their loans? And what happens if, in the pursuit of profits, banks do not maintain levels of reserves and capital consistent with their own stability? Questions which, in this country, are no mere thought experiment. The rise of cryptocurrencies will, of course, impact upon this side of banking, but it's more to the first function I want to discuss, the operation of a payment system. No modern economy can exist without a fit-for-purpose payment system. It is the bedrock for the exchange of all goods and services. The global use of national and international currencies has satisfied this requirement for decades. Fiat currencies are a tried and tested system which has its flaws, but when instituted correctly works. All this changes with crypto and its associated technologies, blockchain and its cousin distributed ledger technology, and the combination of which could render traditional banking completely obsolete. The reason for this, in simple terms, lies in the fact that cryptocurrencies use blockchain technology to avoid the need for a trusted third party, i.e. a bank. In traditional banking, the banks act as that trusted third party. If I wire you money, the bank takes it from my account and puts it into yours. If they took it out of mine and they didn't put it into yours, it would disappear. If they put it into your account but didn't take it out of mine, I could spend it twice. So the so-called double spending problem, first identified in 1982, was solved in 2008 with the advent of blockchain. I won't bore you with the details for that. I point out towards Satoshi Nakamoto's 2008 white paper, Bitcoin, a peer-to-peer electronic cash system, essential reading for anyone looking and seeking to understand underlying cryptographic design of blockchain technology. The threat this poses to traditional banking cannot be overstated. Our banks and our governments can no longer ignore what is happening with cryptocurrencies. We must adopt them and adapt them, or we'll be left behind. I'm sure, as I've been speaking, some of you may be still thinking that all of this is a fad, that all of this will collapse, the Dutch tulips of our century. I can empathise with that viewpoint. History is littered with failed projects which were heralded as the future. The statement that cryptocurrencies are the future was optimistic in 2009. It was understandably positioned in 2015, and in 2021 it's simply the truth. Each generation is presented with a handful of gold rush moments, times where massive change provides incredible opportunity for those ready and willing to take it. Each of those moments has the naysayers. One thinks of the infamous quote from a particular Nobel laureate: by 2005 or so, it will become clear that the Internet's impact on the economy has been no greater than the fax machine. The advent of cryptocurrency is the gold rush of our time, the reprise of the dot-com boom in an entirely new way. The question is, I ask, are we ready? Ireland enjoys a reputation as the tech capital of Europe, thanks to international IT giants like Google and Apple, as well as the native start-ups that are gathering momentum and which we have accelerated economic recovery and growth in recent years. If anyone is going to be ahead of the curve when it comes to cryptocurrency, it should be us. But when I talk about being ahead of the curve, I'm not talking about the multinationals, I'm not talking about the tech giants or the offshore funds. They've woken up to this. It took them a while, but the big players have gotten wise to what's going on. They're going to make their money, as they always do. In September 2017, JP Morgan Chase CEO Jamie Dimon derided Bitcoin. It's worse than tulip bulbs, he said, referring to the 17th century Dutch tulip market bubble. It won't end well. Someone is going to get killed. That was 4 years ago. The banking giant recently predicted that Bitcoin's price can go over $146,000. Its own strategists, led by their managing director, said that the cryptocurrency will get immensely popular and Bitcoin will soon become the alternative to gold. Lloyd Blankfield, senior chairman of Goldman Sachs, once said, "Something that moves 20% overnight does not feel like a currency. It is a vehicle to perpetuate fraud." 3 days ago, an internal memo revealed that Goldman Sachs has created a new, dedicated cryptocurrency trading team. One by one, every major critic and sceptic is falling and getting on board before it is too late. My question is, where will Ireland be on the timeline? I'm talking to the Irish banks and the government. What systems are being put in place to account for the changes that will be wrought by the advances in crypto? What research and development is being established and funded to ensure that Ireland isn't playing catch-up in the late 2020s? Proactivity by the government in this regard is essential. Minister O'Donoghue, are you talking to the banks about this? What plans does this government have to embrace digital currency? It doesn't get a single mention in the programme for government. It's an omission that baffles the mind. The new frontier is the most clear-cut opportunity in a long time for the people of Ireland to increase their lot in life. I think it is no exaggeration at all for me to say that Irish debt could be obliterated if the Irish government plays its cards right in the ongoing crypto revolution. We're talking about generational wealth and what will be sorely needed replenishing of the exchequer coffins following the COVID pandemic and lockdowns. So, Minister, I'm seeking reassurance that in 10 years we're not going to look back and say ruefully, we should have acted. And if we're not acting right now, then by God, we should be able to address this matter urgently. Thank you, Minister.
And I'd like to address in particular the point that was put to me there by Senator Keogan regarding the impact of technology on currency and what that means for banking. The Senator and a number of other colleagues did raise the issues regarding the development of cryptocurrencies, of Bitcoin, and what that can mean for the future of traditional and retail banks. This is an issue and an area that Ireland and the Department of Finance is already active in. We have, in fact, coming up a blockchain day. We have a blockchain unit within the Department of Finance that looks at the future of decentralised finance and what that could mean for the Irish economy. But there are two really important caveats about that. The first caveat is how other people decide to determine what their store of value is, of course, their right within a market economy. But the development of a store of value has to be reconciled with the needs that we all have for financial stability, number one. And secondly, the development of that store of value, we need to bear in mind, should not be at the expense of the other ways in which we look to store value. For example, through the use of a currency and how we store and bank that currency in retail banks. And these are the kind of issues that are being now considered by the European Central Bank, where they are going to be making decisions before the summer regarding the future of further exploratory work in relation to an euro. And I strongly believe that the maintenance of monetary sovereignty is a really important aspect of national economies, but in our case here, in this part of the world, the Eurozone and its interests. And that's why the work of the ECB in this area is really, really important. But the development of something like that, as demonstrated only in this week's Economist, is something that has really fundamental issues for retail banking, which is why advancing this cautiously, I believe, is appropriate.